Hello everyone, my name is Wiejay ABAD, and now I'm going to report the continuation of this presentation, sample of pro forma projections. As what we have learned, pro forma is a financial forecast based on pro forma financial statements, which means financial statements are much needed to create a pro forma projections. You create a pro forma cash flow statement much the same way you'd create a normal cash flow statement. That means taking info from the income statements, then using the cash flow statement format to plot out where your money is going and what you'll have on hand at any one time. This pro forma statement can be part of a larger cash flow forecast used for decision making. Cash flow forecast is also known as a cash flow projections. It's like a budget, but rather than estimating revenues and expenses, it estimates cash coming in and going out based on the past business performance. Your projected cash flow can give you a few different insights. If it's negative, it means you won't have enough cash on hand to run your business according to your current trajectory. You'll have to make plans to borrow money and pay it off. On the other hand, if net cash flow is positive, you can plan on having enough extra cash on hand to pay off loans or save for a big investment. So it is an example of pro forma cash flow statement. Stated here is the current year is 2021, and it forecasts the next 2 years, 2022 and 2023. It forecasts its opening balance, its cash received, and cash paid off. It also forecasts its net cash flow operations. Creating a pro forma balance sheet. By drawing on info from the income statement and the cash flow statement, you can create pro forma balance sheets. However, you'll also need previous balance sheets to make this useful, so you can see how your business gets from balance A to balance B. The balance sheet will project changes in your business accounts over time, so you can plan where to move money when. Here is an example of pro forma balance sheet. Still, the current year is 2021, and it forecasts the next 2 years, 2022 and 2023. It forecasts its current assets, its non-current assets, and its total assets. Sample of pro forma income statement. How to create a pro forma statements. The sample pro forma statements below may look different from the statements you create, depending on what your template looks like. But generally, these are the steps you need to create them, and then info your pro forma statements should include. There are 5 steps to creating a pro forma income statement. Number 1. Set a goal for sales in the period you're looking at. Let's say you want to increase your income by $18,000 over the course of 1 year. Next step, set a production schedule that will let you reach your goal and map it out over the time you're recovering. In this case, you'll want to earn an additional $1,500 income every month for 12 months. Third step, plan how you'll match your production schedule. You could do this by growing your numbers of sales a fixed amount every month, or gradually increasing the number of sales you make per month. It's up to you, or trust your experience as a business owner. Fourth step, it's time for the loss part of profit and loss. Calculate the cost of goods sold for each month in your projection. Then, deduct it from your sales. Deduct any other operating expenses you have as well. In calculating the cost of goods sold, the formula is beginning inventory plus inventory purchases made during the report period minus ending inventory. For the final step, prepare your pro forma income statement using the data you've compiled in the prior 4 steps. Note, your pro forma statements will be much more accurate if your bookkeeping is up to date. That's why, when you project your future period, you're basing it off the reality of your business today. Example of pro forma income statement. The current year is 2021. It forecasts the year 2022 and 2023. It forecasts sales revenue, cost of sales, gross profit, operating expenses, up to the net income. An example of this is also an example of pro forma income statement from the year 1, year 2, and year 3. Still, it forecasts the next 2 years. That will conclude all our report. Thank you guys for listening and have a nice day.